Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Hey everybody, good afternoon. This is David Blake with the Tuesday Tech Talk. And like every week, we're going to quickly review the last couple days, look at the market letter from last week, and then kind of figure out whether this market's going to break out to the upside or whether August is going to throw us a little twist and we kind of back off a little bit going into the fall here. Generally, if you're new, I talk about 20-25 minutes. We look at a couple different charts, and then we open it up to everybody. They can ask individual stocks. We have about 7 or 8 came in this week to look at, so we'll spend a little bit more time looking at that. But just to get started, it's been kind of a strange week since the last webinar. The Dow Jones, including today, has been down 7 days in a row, while the NASDAQ had put together a 5-day win streak, mainly on strength in technology and biotechs, and that took the NASDAQ up to a 52-week high here the other day, yesterday actually, backing off a little bit today. And we're actually within about, on the NASDAQ, within about 40, 50 points of an all-time high. Okay, on the Dow Jones, we have a positive CTI still of +3. That's projected to stay positive through this week and into next week. Then we go to a negative or sell on the market. Should be a period of weakness on the different cycles. That stays like that, so we should have a rough patch going probably through August and into September if the thing is correct again. Momentum index last month or last week jumped to a bullish +7. That's because the other indexes are outperforming the Dow Jones. Since we put the lows in on the last cycle in May, the Russell 2000 is now up about, not counting today, but up about 11.4%. The NASDAQ is up almost 10%. Utilities 12%. S&P 6.5%. The Dow is only up about 5.7% off of these lows that you see here in June from when we went to a buy. Internal breadth is still in bullish. We actually had a new all-time high on the NYSE AD line again on Friday. We've backed off a little bit from that. The sectors were mixed last week. Technology and healthcare were outperformed as we still go through this rotation where investors were pulling out of some of the more defensive sectors like consumer staples and utilities and energy. I still think you're going to see some rotation here for a little while. Although if you're still long those sectors in the consumer staples and utilities, I'm not a seller of them yet. Not until you see whether or not this market's going to break out to the upside. Because if we do pull back, those sectors could go sideways to a little bit up. They'll get some more buying pressure. And last, we're going to talk a little bit more about the U.S. dollar. Last Friday, helping to push the stocks to a new high. With a big drop in the U.S. dollar after the GDP was flagged. That was cut in half to come in like 1.2%. And we'll also take a look at crude. We've been talking about that, where once we see crude, if it breaks below $40, we think that could probably at least put a stall rally for a little while. Okay, first of all, we're going to look at the chart of the Dow Jones, and this is again a little bit crazy. If you look over here, you're getting a lot of talk about what this pattern is, and some technicians will call this a flag pattern. I'm not convinced that this is a flag pattern. Doing on a flag, you'll see it come down a little bit more like this, and then you'll break out to the upside. And what this here represents is the flag pull. This is kind of going a little bit sideways, coming off a little bit. You're seeing the 14-day RSI start to show. It's not really a negative divergence, but it's showing the weakening in the Dow, and especially the slowing of the momentum, which is kind of crazy here. If by chance we would see this market take off up this way and break through that top side of that flag, it's actually going to target 19,165 for the Dow Jones. So a push up here to take out the old highs is going to be going to throw a little bit of a scare into the shorts, so it could induce a big buy. However, I'm not convinced that this is a flag that we're going to see in here. In fact, today we actually kind of broke down to the downside on this, and that's a red flag. We did hit our original target, which was 18.6 a week or two ago. But if we do break down to the downside, today we're down about 120 points or so. Your first target down here is going to be around 18,250, which would signal that we may be in the midst of a little bit of a pullback. That would also take you down close to around the 18,000 area after that, which would be the 100-day moving average, which also would coincide with about 38.2% drop, a retracement of this whole move off of the lows up to the recent highs. If it does pick up from this area with more selling, and if we get down to and we retrace 50% of the whole move up, that would get you down to the 100-day moving average, which is right around 17. Looks like around 17,850, 17,9. So if things pick up on the downside, that would probably be where we might find some support. Okay, second I want to show you is the weekly chart of the Dow Jones, and it looks a little bit better in here. It's but it is showing some negative divergence on here. If we're breaking out the new highs, you don't see the 14-week RSI, breaking out the new highs also, which is a little bit of a concern. You also are showing negative divergence in the 10-week rate of change, which is basically just measures how much momentum you have. Again, if we take this and we trace half of this move, actually going back from February now, you could get a pull back to around 17.5, 17.6, which would be right around the 100-week moving average. So that would just bring it actually back down into that sideways range where we've been in for quite a while. So that's just the downside, some areas that you may want to take a look at. Now on the bullish side, though, we've talked before about this MACD, the long term, and this isn't an indicator that gives a lot of signals, obviously. So when it does go bullish, it means we should probably stay bullish for a while. However, it doesn't mean that if we do go sideways and have a little bit of a choppy market, this could still stay bullish as it kind of goes up and goes flat before moving on up. So I'm not overly bullish on the Dow at this point. We'll look at some other markets to see if we have any other any confirmation, which I'm not seeing. Okay, we came close to a new high on Friday. The target was 22, so we're almost to the target on the S&P 500. Again, you see this sideways in a narrow range here. I think I read somewhere where somebody said this was the longest period for this type of a range in like 45 years. Again, this doesn't look like I wouldn't call this a flag pattern by any means. And again, here you can see while it's going sideways, the momentum indicators are coming down, almost ready to go negative, and the RSI is coming down. But you do have your MACD long-term on the daily chart. It's still staying positive, but it could be starting to flip over. Okay, if we look at the weekly chart, you can see again going back to the February highs. If this thing would start to break down a little bit, you get down here around 20. Let's see, 2120. It would be. Let's see where are we at here. 2120 would be some support over here for this thing, but you have the 100-week moving average coming in here around 2070 or so. So you might want to watch that 2040, 2050 would be where I would target on a pullback. That's also kind of where this upward trend line comes in, and also where the 50-100-week moving average come in. Disruption of that area, maybe you get a pullback if something happens, globally or whatever, or something with the election. You might get a pullback down here around 1990, 95, something like that. That would be a 50% retracement of this whole thing. But I'm not really looking for that at this stage. Okay, we look at the NASDAQ. This thing has been a rocket shot with the tech and biotech stocks running higher. Our target on this was 5,200. We almost hit that intraday yesterday. Again, there's no flag to confirm what the Dow has. So this thing here is, it looks very extended. If we could get a pullback, you might get something back down to around 5,000. That would be a 38.2% retracement. But again, you're starting to see some in the rate of change a little bit of slowing in the negative divergence here, even as it's making new highs. This is coming down, so that's a little bit of a red flag on that. Okay, now this is something I wanted to show you. You won't see this talked about very often, but when you see something like this on a rocket shot, what a lot of technicians can do, and you can do this with your finger, with your thumb and index finger, if you go to areas like right here and take this 200-day moving average, you put your thumb on here and your index finger over here. Then you go up here to some of these areas where the market's starting to take off. You'll find it's very strange, but once you signal this, the market usually won't get much further than where it is. Like if this is say, I don't know, say an inch and a half or whatever, this may be an inch and a half, this will be an inch and a half. Usually you will see the correction come in the same place. But you can see over here, this thing is more extended than it's been away from the 200-day moving average, going back years. And in fact, it's even more than when we hit the new high back in May of June of last year. So this is telling me that you're probably not going to break out the upside in here right now. I think that this is showing you, if you use that little finger trick, that you've probably pretty much reached the limit for this little rally, and you can probably look for something to pull back on the NASDAQ. That's something that you can work out on different indexes, and it's actually very effective. You don't see a lot of technicians talking about that, but it does work. Okay, here's the weekly NASDAQ chart. Again, if you get a little bit of a pulling back, a 38.2 retracement would bring this back down just above 5,000. A little bit picks up in that. You come back down here to these highs that are made in April and in June would probably be support. So again, I'm not looking for any kind of a big pullback, but I do think that we are definitely susceptible very shortly here to having a little bit of a correction going into the August. Again, that's also when coincides with the CTI going negative too. So I would probably, on trading issues, be thinking about taking profits over the next week or two on that stage. Okay, last thing I want to look at, we talk about this, and here's the Dow Jones Transportation Index. It looked like we were getting ready to break out here about 2 weeks ago, and we started to pull back. Again, here's that pattern that starts to look like a flag. Today we actually broke down to the downside, and we got down to we're 76.68. So we're down in this area right here, trying to hold on to this 200-day moving average. We'll have to see if it does that. If it breaks through that, that's going to be a real big red flag, and then that would almost signal to you that, yeah, we're going to have a correction here probably for the next, over the next 6 or 7 weeks. That would be one of the, so I'm getting more confirmations that we're probably going to go down, and that we're going to break out to the upside. So just keep that in mind here going forward if you're thinking about trying to buy some new positions. And here's the transports on the weekly chart. Again, the 76 area, we're down here. We've already retraced 38.2% of this move from back here in January up. And if we come back down here and break this 200-week moving or 100-week moving average, we could get down here around 7,400, something like that, for support. So again, the indicators are starting to point to me that we're probably going to resolve this to the downside here over the short term. Okay. Now, what's good? I want to show you a couple of these charts. We had somebody wanting me to look at this. If we're trying to see what's going on here, this is the BBH. It's one of the biotech holders. I look at this. I also look at the IBB, which is the NASDAQ biotech. This is another rocket shot that's going on here. You are breaking out you've taken out the highs from April and also in June. That's bullish. You've taken out the market, the moving averages. You're not seeing negative divergence in the RSI. Rate of change is still positive. MACD is positive. I think this thing could probably, if we go sideways to just slightly down, I think the biotechs can still outperform the broader market. I don't see this as something you want to just dump. You get a pullback down here with the broader market down to the 200-day moving average. That would bring you down from about 118 down to about 111, 112. That would probably represent a buying opportunity for you if you're holding on to or looking to buy some biotechs. Another one that's extended, that's showing the strength in the NASDAQ, where the money came from. Here's the biotechs and the semiconductors. This is the Philadelphia Semiconductor Index. Huge move off of this. It's something up like 18% or something off of this low. Again, is this a flag pattern that's going to break out to the upside? I don't think so. You're starting to see a little bit of slowing, not too bad in the indicators, but even on the MACD, you're getting quite a gap in here that I think you're overextended. You probably work your way a little bit down to the downside, maybe fill this gap in here from about a week and a half ago and maybe come back down to the 740 area. But the semiconductors have had a heck of a run. We're getting a lot of the different earnings coming in from them going, the next week or so. Okay, yesterday, this is the energy spider. It's XLE is the symbol, and we've been talking about this for quite a while, though I thought this thing looked awful toppy. I thought I recommended probably taking profits over in this area. Yesterday, we were down over 3% on this. We actually had a spike this morning. It jumped back up about 1.5%. We're back negative. We're flat again. This is where you're battling that $40 area in oil. I'm not sure that's going to hold. If it doesn't hold, it broke below yesterday, and I think you can probably come down here around $35 on oil. And that's also another red flag for the broader market because it's going to induce selling in the oil-related stocks, and a lot of the movement off of some of this area through April and June and all has been on oil-related stocks. So if they start to give back some of their gains, that's another red flag for the broader market. And here you can see the rollover in the different indicators. On a bull market, this 14-day RSI shouldn't go below 40. I think we're down here below 30 right now. So that's also kind of confirming that oil and energy is probably going to be one of the factors that lead us lower. I'm just going to touch base real quickly on a few more of these sectors. Like I said, I got a couple stocks that people came in where you may want to keep your money going. Okay, here's the financial sector. Can't get out of the way. Can't break out higher. You're starting to see the momentum, turning over here, almost going negative. If this thing breaks below this this support area here, which it has today a little bit, we're 23.42. So we're down here today. The financial sector needs to hold $23. If it does that, that would also signal that the market's going lower. Because it can't really break out much higher without support from the financials. These things on pullbacks I would be buyers of, but I'm a buyer of it probably longer term, thinking out maybe a year or so if you get an opportunity to buy some of these down in this area. Okay, here's the healthcare spider. Again, this was one of the reasons why the NASDAQ's breaking out. You have a nice trend line support in here. If the market starts to break down, you could probably buy this thing down around 72 if we roll over. Today we're off a little bit. It's at 75.11 still. So we're right around this area. Nothing. This doesn't bother me. I like the healthcare. I've liked it for a while. I think this. If you're in this thing, you probably hold on to that and buy dips on that for later on in the year. Here's the consumer staples. When we talked about the rotation out in the more growth areas, well, this is what you see when you see a rotation. You have a breakout to new highs, and you start seeing this thing roll over. Now I wouldn't, even though you're getting a rotation, I wouldn't be selling the consumer staple stocks if I owned them. The reason being is the whole market rolls over. This would be one of the stronger areas, although I'm not a new buyer of consumer staples or utilities. I think that, as long as the rates are zero, you can hang on to this thing until the whole market would start to break down. But if we do pull back to around 17.5, 17.6 in the Dow, then you would probably see this thing going sideways. So you own them, I'd hold on to them. I'm not looking, even with rotation, I'm not looking to sell unless, like say, the Dow takes a big leg up and takes out that flag pattern, if that's what it is. Next one over here, industrials. We're going to look at the dollar. That's what you want to watch on the dollar for how this thing's going to perform. But I do see some, rolling over here. Momentum starting to really break down. Some negative divergence on this. Industrials, I would probably be more inclined to buy the ones that get most of their business here in the States. here's the power shares on the UUP is a symbol of this on the dollar. So you can see we're starting to work our way higher. They're talking about, when's the next rate hike? Well, maybe September or whatever. Okay, well, when we get this GDP cut last week, where GDP was cut in half, and that knocked the dollar for a loop, which helped, some of the commodities and all, but it didn't do much for oil. Oil, even with this dollar falling like that, has still been struggling to stay above $40. So that tells you there's another issue. It's not just the fact that the dollar was getting stronger, the oil was rolling over. There's something else going on, whether it's global growth concerns or the fact that we slash our GDP, and then we were supposed to start to see an acceleration in earnings for the third quarter. I don't think that's going to happen, and I have a couple reasons for that. One of them being I don't think if you're a business owner, you're looking to be expanding your business right at this point going into election. I think that you probably are more inclined to listen to see who takes a solid lead or what's going to happen with that before I put money back into my business. So I think you're going to start to see the economic data start to get a little bit weaker. That takes off the rate, any kind of idea for a rate hike in September. I don't think they do it before an election anyway. And this thing here, if it starts to break down, it's not. Sometimes it's good for the market. It may help keep a bottom under the market if it breaks down to this area. But it's not going to be good for. It's also pointing to too much weakness, I think. So keep an eye on this thing, and if it where it's going to go, if it gets up, starts getting stronger again, then maybe maybe things are going to pick up. But I don't think you're going to see that acceleration in earnings for the third quarter. That's going to keep this thing, I think, a little kind of low. Okay, next we're going to dip over here. All right, that's kind of it. Just touching base on the markets and the different indexes and the sectors. I did have a lot of stocks that people wanted me to get to, and I'll pull up the chart here in just a minute. But one of them was Mohawk Industries. You can see here a breakout on this. I don't particularly like the fact that people were selling pretty steady across here. This is the 50-day up-down ratio. Ideally, what you want to see is when things are going sideways, you want to see this thing going up. I do see a little bit of a pickup here. RSI looks strong and MACD looks good, but I don't think I'd be chasing this thing. If you're long, I don't see any reason to sell it. Your sell stop would probably be coming down here around this. If you're looking to buy, I'd probably wait to see if we can get a pullback down here around $200 before I would move more stock and more money into that. One other question I have before I go to the charts. Someone asked me when we're looking at a breakout. Let's see. Okay, when you look at a breakout or a breakdown, is there a certain amount of a number of points or something that they look at to indicate that it's for real? I just want to touch base. When you see something like this break out, you can do if you draw in the trend line or resistance lines. Traders will look at this three different ways. Number one, they're going to use closing prices. They don't want to buy a breakout and then also the market then comes back in with just a fake breakout. You get whipsaw doing that. So what a lot of traders will do, number one, they'll look for 3 days. If we can close above the breakout or below the support line, and it does it for 3 days in a row, that's usually a signal that it's for real. Another thing that some more active traders will look at is they'll look at 3% roll. If it breaks out by 3% or breaks below it by 3%, that'll confirm it for them. That's good enough, and they'll either buy it or sell us into that thing. So now let me move over here to our where we can share the charts. How do I do that well? I pull this in. Okay. Just bear with me just for a minute here. Okay, can you see the chart yet? You good? Okay. First chart we had on here, something we want to look at was EWY. It was the iShares Korea. Emerging markets have been on fire here for most of the year. some of the model portfolios that we look at, like Peru and Brazil, have been up. Some of those markets are up 25, 30%. We just added positions in Southeast Asia, so this looks strong. Great accumulation in Korea. Everything looks bullish on this. The 14-day RSI is up over 70. Maybe it's obviously a little bit extended, but with the weaker dollar, that's good for emerging markets. And I think this actually, you can see this breakout coincides with last week's big drop in the dollar. That sparked another breakout in some of the emerging market things. So I like Southeast Asia. I think that as long as we're going sideways and the dollar stays weak, the emerging markets should still outperform. May not want to chase it right in here, but if you have a heck of a move from 46 to 56, you're up about 27% since the first of the year. So, but again, if you're long that thing, you're still seeing a lot of money going into the emerging markets. Okay, here's one. Next one we had was Pfizer. It's in the healthcare. We broke out to a new high, one-year high yesterday. Up-down ratio, nice accumulation through this. RSI, no bullish, maybe a little bit of bullish divergence, not really. But this looks strong. I like the healthcare. Let me trade something out of here real quick. When I look at more trading ideas, I want to look at a 10-day, 21-day. You're following your 10-day moving average. If you're looking to trade Pfizer, you want to, as long as it's following this 10-day, you're in good shape. Here's a 21-day. If it breaks down below there, if you're just in it for a quick pop, that might be where you might want to consider going out. But the drug stocks look fine to me. It's one of the strongest sectors. So again, it's that old adage: you're buying a strong stock in a strong sector. Johnson & Johnson. Again, it's going to have a nice looking chart in the right sector. You're moving up right along that 10-day. You're up above the 21-day. Again, great accumulation in this thing. When you see them spike up like that, that's institutional buying, not just the retail guy. A little bit of negative divergence here, not really, nothing that concern me. Again, it's a strong stock in a strong sector. This is where you want to be, and if you're long, you just keep riding these things. GILD had a little bit of a hiccup over in here it's having a little bit of a hard time. I think you're probably down today. You're probably going to test this to see if you break below this 77.92, you're breaking a double bottom pattern, which wouldn't be too well. Let's see, GILD. You're at 80.25 right now, so you got a little bit of downside here before you. If you can get a double bottom in, you might get a little bit of a bounce. Accumulation is not great, but it's not bad. Again, I would, if you're looking to buy this thing, you may get a retest of this area. You're awful close. So, I like the area, but you're kind of in a downtrend. I would, if you get a bounce off of this area here and start to move up, that might be where you want to go into. If you're just trying to just go in here because you want to own the stock, you might still be catching a bit of a falling knife. So I would be, I'm not sure I'd be wanting to buy this thing yet. Next one, IBB. We looked at that again. You're in. I like the biotechs. I think this is where you want to be. You broke out of this double top pattern over here. Looks good. Nice accumulation, almost straight up from here. You've gone from 0.73 to 1.57 on the up-down slope. That's where you want to be. The RSI is looking strong. Everything looks good on this thing. So any pullbacks in the biotechs, I think you buy them, especially if the chart looks good. Okay, got a couple questions over here. Hold on one second. Okay, what are the best indicators for selling on a long position? Using score from 0 to -1, -2, -3, and -3. There's a score as far as that goes. It's going to be kind of obviously whether you're going short term, intermediate term, or long term. If you're if you're more of an intermediate term, kind of a swing trader, I would probably want to hold on to a -3 before I would think about going out. Even then, if it's something like say a Bristol Myers or Johnson & Johnson, where you start to see a rollover, you might want to sell covered calls in there. If you have a skyrocket and you start seeing something, and you want to hold on to something, and you see it come down to a -2, and then you can always buy a put or something on a position if you've got a great big profit in that. So instead of giving away the profits, you can sell or buy a put just to lock it in, risk 50 cents of your profits to the downside in case the thing rolls over. Okay, let's see, EPIQ. The company sold, but second opinion upgraded to a buy. EPIQ, okay. EPIQ Systems. We had a long on it. EPIQ. What's it doing today? Down a penny today. 16.75 or 16.34 today. This thing, the way the indicators and stuff are moving, I'd imagine this may be something that doesn't have a lot of volume. When you have something that gaps up like this, what you want to watch when you trade it, you're obviously looking to see if this thing's going to hold the gap. So this thing would come down here and break below, around 16.10, 16.15. That would be a little bit of trouble. You could come down here at least to this area, to the 15.50, and maybe even fill the whole gap down to 15. But you had a nice buy over in this area for this gap, and so far you're holding the gap. So I don't really know anything about the stock, but as long as it holds that gap, you might be able to get a rally back up in this area, up into the 17s, if the whole market looks good. Again, I don't know what the industry is. I don't know anything about this except for when I'm looking at the chart. And then, if it gaps up from here, then you have a breakaway gap, and it would be even more bullish. Okay, let me see any other questions coming in here. ENDP. All right, let me take a look at that. I actually looked at this not too long ago. ENDP. Endo International. This is really, you see some nice accumulation going up here while it's going sideways. I believe, if I'm not mistaken, this is a generic drug dealer, drug stock, I think, where it gets a license for some of the other drugs. It's got great upside potential, but you want to watch this thing. If it starts to break out to the upside, it'll fill this gap, which would be, you could get a trade on this thing maybe up to around $28, $29, or $30 or something like that. So you'd have to see what's going on with that. But you're starting to see the accumulation in that. It may have to go sideways a little bit longer. But if you start seeing something like this over in here, where you get a breakout, that would signal you could probably get a trade on this thing. It would be a nice, healthy trade. This thing's where it's 17 and you're 17.09 right now. You're up 21 cents on a down market today. So decent volume on it. Again, if you start to see this thing starting to pick up some momentum, we start to see the RSI start to turn up again. You could get a real nice trade out of this thing, especially if the earnings come in, it beat lowered expectations or whatever. But I like some of these stocks. I think another one is LCI. McKesson does some of that. There's a lot of that. Those stocks have some big upside potential. Okay, it's been about 35 minutes. That's usually about as long as we go. I don't see any more questions coming in. So I will wrap it up. I hope you got something out of this. Again, I don't see the confirmation that we're going to break out and skyrocket to this 19,165 or whatever on my earlier target. I'm seeing more an inclination for this thing to kind of run out of steam here, especially if the oil keeps below, breaks down below 40. That could take us down to about 35 to 37 area on oil, and that would probably induce some profit taking for the people that bought some of these oil stocks that are up. Some of these profits are 50, 60, 70% on some of those oil stocks. So, if I owned them, I would be selling at that point if we start to break down. So, be careful in here. Again, we're probably going to go to a sell on the market in about a week and a half or so, and I think we could have some rough sledding going into the end of August and into September. A lot of that probably maybe until we get a solid candidate comes out front in the presidential elections, and maybe some of these debates go on. So I would be cautious in here, not just trying to dump everything or sell everything. Just because the CTI goes negative, sometimes you can get a sideways to slightly lower market like we did on the last call. You know, I think by the time we went to a buy, we lost 200 points, but for about 6 or 7 weeks there, it was mainly sideways. So I hope you got something out of this today, and we'll be back next week. Somebody asked me to review sectors that might benefit from a Trump presidency or some that would benefit from a Clinton presidency. So I'll try to dig into some of that for next week, and that would give us some areas that if we're on the sidelines into September, where we might want to start to look for areas that we could buy on some big pullbacks. All right, thanks a lot for joining me.